This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
And our stock of the day is mining royalties company Deterra Royalties. So it's making a pivot into lithium, having made an all-cash offer for UK-listed lithium mining group Trident Royalties for $276 million, with Trident's directors indicating they'll unanimously recommend that shareholders vote in favour of the takeover offer. Trident is a diversified mining royalty company that has a portfolio of some 21 royalties, providing exposure to base metals, precious, bulks and also battery metals. That includes lithium, also gold, silver, copper and iron ore. Deterra Managing Director Julian Andrews saying it is an opportunity to accelerate the growth of our portfolio through the addition of a high quality portfolio of 21 royalties and royalty-like instruments, the majority of which are over North American domiciled assets at an attractive time in the commodity cycle. Taking a look at the share price, well, the market taking that negatively, it is down 7%. I guess that happens when you're looking at acquisition, doesn't it? Shareholders wanting to know just a little bit more and how that's going to add value to the company more broadly. Well, let's get into some analysis then. Ben, let's start with you of how you look at that particular acquisition and more broadly what you're seeing with Deterra.
Yeah, well, I'm a bit frustrated with Deterra, to be honest. We are a pretty big shareholder in Deterra, and it's been a great investment for us because this was punching out about a 10% fully franked yield since it's come onto the exchange. Look, it's a tricky one, Andrew, because the company's actually refusing to talk about it, which is kind of the reason for my frustration, because they're saying they're bound by UK takeover law. And I guess my sort of concern is that I think Deterra owned the highest quality mining royalty on the planet before this. Yes, they only have one royalty, but it was an extremely good one.
In BHP.
Over the mining area C. They got 1.232% of every dollar of sales revenue that comes out of that mine, which we'll be producing for the next 50 years. But to me, I was worried that they would feel the need to go and do something because it is a weird company. And I look at this collection and think this is a much lower collection of royalties. I guess you got to weigh up what they're paying. It does, I'd never heard of Trident before this morning, but it does look like the future of that business is riding on this, what apparently is an enormous lithium mine in America, which is going to come online in a few years. And maybe there is logic in it, but I think that one of the reasons for the drop today is a lot of people are in this stock for the dividend, and the company's announced that it's going to halve the payout ratio from 100 to 50%, and it hasn't, I don't really understand why, because they can easily fund this transaction, and they haven't given a time frame, we'll do it for 2 years and then we'll revert back.
Yeah.
So I don't know. I mean, it's hard to put a recommendation on because I don't feel like I've got enough information to make a recommendation. I guess to put it in perspective, it is a fairly small transaction versus the company's size. It looks like an overreaction. I mean, it got down to 390 this morning. It's probably a buy, but I'd want to understand better the outlook for Trident and why they've bought it and what they're paying for it and all that kind of thing.
Okay, cautious buy. We've got a caveat over that, obviously. Let's pending some further information. Adam.
Yeah, it's interesting. They bought a like-for-like business. Trident's a royalty business. Deterra's a royalty business. So I think they sort of know their market. So I think that's a positive for it. But you're right. There's not a lot of information, and it's really too early for us to all form a view about this. The market has spoken, and I think that's where you see this downturn and taking that 50% payout ratio or from 100%, that really does change the business and change the company. Now they're probably just saying that because they need to make sure that they got cash, and that's understandable. But overall, I think this one is a really tough one. I'd like to see what the dividend yield is now at where the price is now. Even with a 50% payout ratio, it probably sits up still okay.
Yeah.
For that. But yeah, you're looking at some of those assets and gold, copper, silver, lithium, and in America, in Africa and South America, again, that risk profile just jumps ridiculously now because you've got all these you've got these South American assets that, we just don't know what the political situation's like over there as well. So it's going to be a neutral for me. I'd like to see more information about it. You need to digest this. The market's already spoken, but I suspect you're going to see further selling or at least the consolidation of the share price at these levels until the company does come out and give us some more information. So it'll be a hold at the moment for me.
Yep. Okay. All right. So that is Deterra Royalties there. Both Ben and Adam, they're pointing to the lack of information there, so it's a bit hard to make a call. But look, Ben obviously likes it enough to say a buy, cautious buy, just on waiting that information. Both worried about what the impact on the dividend there. It is a dividend stock, and as a result, there also, Adam's saying, just a bit too early to make that call. And that is our stock of the day.
Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.